because if you're not adding value, then you're not going to receive more value. And, to your point, if you're playing small and if you're, pinching pennies and, because when you do play it small, like the economies of scale, you don't receive those benefits. There are no economies of scale on smaller deals.
Welcome to the Cash Flow Chronicles. I'm your host, Jonny and the founder of Catani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny, and I'm joined today by Tyler Chesser. Tyler is a high-performance real estate entrepreneur who helps real estate investors and entrepreneurs transform their finances, businesses, and lives. Successful real estate investor with a background as a former perennial top-performing commercial real estate broker, Tyler started investing in multifamily real estate in 2015 as a way to build wealth and create diverse income streams for his family. Prior to 2020 co-founding of the real estate investment firm CF Capital, Tyler spent over 7 years in the business as the founding principal of a successful commercial brokerage company, real estate investor, keynote speaker, and award-winning sales professional after his withdrawal from corporate America in the early 2010s. Tyler, welcome.
Jonathan, thank you so much, man. How are you?
Doing very well, very well. What the listeners need to know is this is our first time actually meeting, but this is probably 5 or 6 times we rescheduled this.
I was going to say it was a collective collaboration on unfortunate circumstances. So yeah, it was like 5th time is a charm. And I was telling you before the show, it was like somebody called me to be out of market like 2 hours away today. And I said, absolutely not. I looked at my calendar. I'm like, Jonathan, I can't do that to you. I can't do that to your audience. I can't do that to your listeners. So look, we made it. It's about commitment and defiant commitment to making this conversation happen.
Honestly, I would have just laughed and been like, you know what, maybe the universe doesn't, but no, I appreciate that very much. And the listeners will as well. Like you said, unfortunate circumstances, most of which have been deal related, which we'll never be upset about. But I also was very sick one time too. So just a accumulation of unfortunate events, but we're here and we're making it happen. So obviously an incredible track record. You've done a lot in this industry. Take us back though. What happened in 2010 that made you want to leave corporate America and jump over here?
Yeah, so it was interesting. I mean, I didn't really know anything about real estate when I started my professional journey. I always kind of thought it was like, hey, go to school, get good grades, get a good job, and do your thing and ride the corporate ladder. I mean, I never really thought about anything other than the corporate ladder. I don't know. I didn't grow up in an entrepreneurial household or anything like that. But I was driven to be successful, and I always kind of visualized loosely myself as this businessman. You know what I mean? And I didn't really know what that meant, but I was fascinated with marketing and really the psychology of business. And to me, like perception of branding and, color schemes and logos and communication and digital marketing strategies and even just traditional marketing strategies, to me it was actually very fascinating. And as I started my career, that's the path that I took. Prior to that, I was in sales, and I've always kind of been a natural salesperson, just connect well with people and, generally pretty persuasive. But, the path that I took from there, because I was like, all right, sales is good, but marketing is so much more fascinating because it was almost sales at scale, but it was shifting behaviors, and it was looking at social science and, utilizing sort of, science and psychology within sort of shifting that behavior. And one of the reasons why, actually looking back as a kid, it was like, all right, I was always fascinated with like Nike as an example. I was like, why did I as a kid think that Nike was like the coolest thing ever? So anyway, long story short, I started my professional career as a marketer for a global conglomerate. And a few years down that path, I was like, man, I looked around and I was like, you know what? I'm really enjoying this work. It's really fascinating to me because I was touching so many different cultures in terms of integrating our brand within those cultures. And it was interesting to me how the perception of our brand was so different in one culture versus another, and that we could design different strategies around that. and be successful in a wide variety of different cultures across the world. So to me, that was super fascinating. But the corporate sort of political environment to me started to weigh on me after a while. And also just that it was, I looked at the ladder and I'm like, damn, this is a long ladder. Like if I want to get to the corner office, it might be 27 years before I really get there. And it was more so about the time on the ladder and, the sort of the political aspects of, what that all looked like. Who was it that's going to put you in that next seat? But it was also like, all right, well, how many years have you been in that seat? And it was like, oh, that didn't really resonate with me. It just felt like there was something off there. And I looked around and I'm like, all right, well, who are making leaps in this world? And I was also a bit of a sort of not a huge way, but I was kind of a rebel. I was like, I'm not willing to accept that. And that idea started festering, and it really took a few years for that idea to really push me into any form of action. The first form of action was, dust off my resume and, go out there into the marketplace and say, hey, look at me, I'm more valuable now, and look at all my experiences, and, to shift to another similar organization in a different, a different part of the marketplace. And ultimately, that was not a successful move. And I'm glad that it wasn't, because obviously it continued to push me in the direction of, okay, well, what else would I do? What else should I do? What else could I do? And I started to just kind of ask that question to people in my network, or, started to expand that network. And, well, who else should I be talking to? As I was really having these internal questions and that became external. And long story short, I landed in real estate, and actually I landed into real estate in a different way than, what I'm doing now. I actually started as a salesperson. I got my real estate license and actually started selling houses on the side of my corporate gig, which was a very short stint, because I realized how emotional that game was, and how not really fitting to my personal just values and philosophy, and just, all right, well, yes, it got my foot in the door and I learned the transactional side of the business. But then there's this whole labyrinth of real estate. When you say the word real estate, as it's like the most broad phrase you could ever say. It's like saying human being, or, it's like right. Planet, or I don't know, plant. You know what I mean? It's like real estate could mean, obviously there's so many different verticals. And so as I started to understand sort of the complexities and all the different angles, I started to see the lay of the land, and I'm like, oh, wow, I didn't realize that everything around me is real estate. I just thought of real estate from my own sort of marketing perspective and just observing my own thought process as a house, homes. And once I started to dig into all these different facets of real estate, obviously I landed in commercial real estate, where I learned about cash flow. I learned about risk. I learned about, creating and optimizing, assets, and really running it as a business, and understanding occupancy, understanding the economics of all of those different things. And it really fascinated me. I grew up, with a reverence towards numbers, and sort of my natural intersection of, being a math geek growing up and being sort of a natural salesperson, and then layering over my marketing experience. It actually kind of lend itself to be a perfect fit. And so I built a commercial real estate brokerage, and really, cut my teeth in multifamily and office and retail, land sales and so forth. And I built a solid business, but I became known as the apartment guy, and I was selling multifamily properties from anywhere from 8 to 10 units to, 100, 150 unit deals. And it was a lot of fun. And I was building a nice business through referrals, and, really learning about, well, what are investors looking for? What makes a good deal a good deal? What makes a bad deal? And, what are the best of the best doing? And what are the folks that are maybe not experiencing as much success? What are they doing, or what are they not doing? And really learning from that process. And through that experience, it was interesting as well, because I was generating a lot of fees and all this kind of stuff. And I was building a solid business. I was advising clients. I was, going out there and getting more education. I went and got my CCIM designation, which is really the PhD of commercial real estate. And I was also investing in myself, and I was just learning, because it felt like each and every day, or each and every week, each and every month, year, so forth, it was like I learned more, but I was like, I also learned more that I didn't know. It was like I uncovered this bigger and bigger gap. And one of the books, of course, that I came across was Rich Dad, Poor Dad, which many of us have read. And I'm like, what the hell am I doing? I'm selling these assets. And, this is great. I'm adding tremendous value in the marketplace, but I'm selling these assets. And, I've created this job for myself. And so I started to invest in real estate at that point in time. I was like, wait a minute, draw a line in the sand. It's time to, play by the rules of the wealthy. And it's not about, taking more and being sort of closed-minded. It's about, look, you got to take care of yourself before you can take care of anybody else. So anyway, long story short, this is my long-winded response to your question. I started investing in income producing multifamily assets at that point in time. And that's when my real journey started because, as an investor, I mean, any of us who have been investing for any moment in time realize that, there's certainly ups and downs. There's mistakes that we all make, and it can be very challenging, but it can also be very rewarding. And I'm glad that I took on that path, and, it's just continued to grow from there.
Wow, that's wild. You don't hear that too often, going from W-2, like corporate, to, broker, and then to investor, syndicator, operator. So that's a fascinating, obviously gave you even that much more knowledge, like you were saying, that much more insight. But then you're like, wait a second, I'm selling these things. And I'm like you, I mean, even probably, probably 6 years ago, I had no idea that apartments were owned by like groups of people, like the tallest, they're building a tall one now, but for the longest time in Salt Lake, the tallest building was the Wells Fargo building. Turns out, obviously now I know Wells Fargo doesn't own that building, but I thought for sure that's what that meant, and then you're like, holy cow, there's there's this whole realm of this business that you don't even realize is there and happening around you. And like you said, such a blanket thing, because you even kind of mentioned it, like you can literally trade raw land.
Yeah,
there's people who don't even like touch anything that has a hard asset on it, and even farther than that, you can trade the note to the land and not even have the, like, it's crazy. You can really do whatever you want.
Dude, if you're a curious person, like this is a space for you, because it never ends. There's so many different angles to this thing. But to your point, it's almost like being an archaeologist. It's like, oh, I just found a bone, and you start dusting it off. And it's like, wait a minute, this is like this is an arm, and then there's a rib cage. Like, holy moly, this is an entire Tyrannosaurus Rex. Like, wow, we found all this thing. And as corny as that sounds, I mean, that was similar. My experience too. It was like the first deal I did was I put my own money into the deal. It was all me. I bought 8 units myself, and I was like, this is great. I generated enough income to where then I could go buy an asset and I could go learn. And, it was kind of the old fashioned way. And a lot of people do that their entire career, where it's like they go and they earn capital and they put it to work and they buy one deal and then they buy another deal and another deal. There's nothing wrong with that. It can be a long and windy road. It was appropriate for me to learn that way early. And, the next deal I did, I brought in one partner and we were 50-50, and it was a bit of a bigger deal. And, then I put together a smaller team. And then it was like, well, wait a minute, like it's like, I looked at these towers and I'm like, man, you, how much money do you have to get to own a property like that? And it's interesting that you recognize that as well. It's like, well, wait a minute. Most of these deals are syndicated, and well, what does that mean? And what does that look like? And why do people do that? And, because the minimal, or the sort of the limited thought process as well, if I bring in more partners, that means I got to give up more of the deal, which means, I don't get as much of the upside. And, you do hear that on some of the, I would consider, maybe the sort of more entry point playing fields. And I do think it's very fascinating as you kind of dig through that.
Yeah, absolutely. I mean, I wouldn't go partner with someone on a duplex, right? You're going to go take that down yourself. A lot of creative financing available. And what's crazy is the same creative financing that you also have that in commercial real estate. You just don't really see it because of the way the market and the economics have worked out. But I will not be surprised if you start to see more creative financing, seller carries, all different kinds of things happen now as we move forward and are presented with a whole new landscape.
I totally agree. And I think that one of the things that I've learned from a group called the Society of Exchange Counselors is, it is all about very creative approaches, right? I mean, real estate, it's about creating outcomes at the end of the day. Like real estate is a vehicle towards creating an outcome that you want in your life, frankly. And if we understand that, that's the baseline of all decisions. Maybe some less sophisticated real estate investors aren't fully aware of that. But ultimately, if we can help them be aware of that, then we can negotiate an agreement. But to your point, the basic way to look at it is, well, you have an asset, I have money, and I have some leverage, and maybe I have access to some financing that, let's go ahead and put together a deal. But that's just one solution. I mean, to your point, it's like seller financing. There could be some trades or exchanges or, other creative deal structures that you put together. I mean, really, the list is pretty endless. And ultimately, it comes down to, well, how well do you understand the outcomes of the parties, and how well do you understand your outcome, and what match can you make? But I think the more and more experience that you have, and the more you surround yourself with people who have had experiences such as, putting these creative deals together, the better success you're going to be able to, put together. But yeah, I would imagine we're going to see more of that as well as we see some corrections in the marketplace.
Yeah, it is. It really is like a blank canvas in this industry. You can just use whatever medium and set it up however you want. And obviously, with syndication, there's a pretty typical structure that you see, right? Of your GP, your LP structure, but even within that, some deals, all of a sudden you got waterfalls and hurdles and all these different things. And the next thing you know, it's like, all of a sudden you're like, holy cow, I didn't realize you could do this. And, turns out there's some other person who's, brought all the capital maybe. And you realize that this is, like you said, a full-on business with all these different sort of structures that have to come together to form it. And then, oh, by the way, you actually have to manage the asset and make it operational and, have a return for your investors.
Well, if you think about it, it's like there's all these different ways to add value. And what you just described is, you have to execute and you got to manage the asset. I mean, if you think about it, like you can even create a deal structure to where it's like, all right, I know that this is what your outcome is. Let's just say somebody wants to sell a piece of property and you're like, well, yeah, I want to make that happen. And here's how we can do that. But why don't you stay in the deal? Why don't I take over the management? Because maybe your issue is, hey, I just don't have the energy or the team to be able to do what is necessary to drive the most value from this asset. I like the asset, but here's what I'm looking to do. Here's the type of value that I'm looking to receive. And maybe you are better positioned to go in there to execute, and you can restructure the deal. You can recapitalize the deal and put that individual in more of a passive position. I mean, that's just one example of literally thousands. And I just think it's always, train your mind to look for the opportunity. And the more and more that you have repetition in the business and you ask yourself, well, how might we be able to solve this problem? How might we be able to get to that outcome? As long as you have sort of reasonable parties, as long as you educate and you say, look, well, here's how that might work. Man, anything is possible.
It's so true. And the thing that I love about all of this, right? We're obviously nerds for this stuff, could talk about it all day long. But, oh, by the way, if you see the value of real estate, but you don't really nerd out like we do, you can be a passive investor and still, participate in these deals. And honestly, the deals are set up for, syndication is very heavily favored towards the limited partners, right? Because obviously you're putting up the money, but, then you don't have to know all this stuff or you need to get creative, and so everybody can play in this arena. That's what I love so much about it.
Well, and you might not have to know all this stuff, and you can draft off of the experience and the expertise and all of that, but you can learn it too along the way, even by being a passive investor. So I think there's just a lot of angles in this. And like you, I'm sure, I mean, I'm a passive investor with others. I'm an active partner. I'm obviously a sponsor of deals as well. So, I think that there's really limitless ways for us to all participate in the business. And it just makes sense in terms of, well, what are your goals? Where are you looking to go? And then reverse engineer that process. And it may be a dynamic set of circumstances, but I think for the listener, it's like, don't limit yourself to one dimensional returns, whether it's financial or experiential. Open yourself up to all of the dynamic experiences, and ultimately the learning and the growth. That's where the real compounding returns come from, in my opinion.
Absolutely. I couldn't agree more. And it really doesn't take much. You definitely hear people, being a passive investor, really didn't know anything, maybe just knew the person and just put the money in, and typically the deal will go right. Hopefully, you obviously hear some horror stories, but all it takes is that one. And then I swear and this is obviously, subjective. I've talked to people who are heavy in the industry, but most of them are like, yeah, I started as a passive investor, and then here they are, they got 500 doors on the active side, right? Because it's like, you get that little taste and you're like, okay, what is my money doing? And then you little bit more. And the next thing you're like, okay, I want to get involved in this.
I feel like it's almost a confidence factor. It's like, once you go out there and it's like, oh my gosh, at least as let's just think of it from the passive investor side of things. It's like, oh my gosh, I'm going to wire all this money. I'm like, how do I know that this isn't like a fraud? Even if I know this person, or let's say I know of them somewhat and I feel confident, but I'm like, man, I'll really feel better once I know. And then it's like, they gain the confidence of like, wow, I'm getting distributions, I'm getting monthly communications, and oh, there's my K1, and wow, that was nice for tax benefits. And then, oh my gosh, full cycle, that was nice. So it's like, you get this confidence, but even just like early on, these little glimpses of confidence, not only maybe a passive investor or even just active, it's like, oh, this thing does work. Like the residents are paying tent, they're paying their rent and all of these different things. And it's like, once you get a glimpse of that, then it's like you have more confidence to take the next step and the next step and the next step. And I think that's where the big returns come from, is just, gaining that confidence, taking more action, taking the next step, getting knocked down, but getting back up, and all these kind of things.
Totally. I couldn't agree more. And it's fun to see, right? Obviously, we're heavily involved in it, but seeing someone kind of the light bulb kind of slowly turn on, for this first investment, or just learning something. And all of a sudden they're like, wait, and depreciation? And you're like, exactly.
Yeah. Well, and even myself, and I'm sure you feel this way too, there's always a little bit of nervousness for any new deal. It's like, oh, you take over a new deal. Like we just bought a new 2-property portfolio, about 500 plus units, apartments. And, there's a little bit of nervousness. It's like, all right, well, we've done our due diligence. We've evaluated, the business plan, and, we've triple checked all of our different, metrics. And it's like, all right, okay, now we close. And it's like, all right, I hope that we don't have a mass exodus of residents, and, I hope our staff sticks around. I hope people pay rent and all this kind of stuff. And, you're kind of crossing your fingers, but you're doing everything you can to succeed. But I think hopefully that's a good reminder for anyone, no matter what stage you're at. It's like, even if you're experiencing that, I think positive movement is always where we need to be. And, right now there's a lot of crazy stuff going on, and, the capital markets, the macro economy, and a lot of people, the tendency is, oh, well, stay still, flat footed, like, wait, let the dust settle before you take that next action. And I think one thing that I've realized in my short experience, and I'm not trying to be the sage on the stage here at all, so please don't misunderstand that. But I think one of the glimpses of wisdom, and I think it's timeless wisdom, is just continual movement. It's like, next step, take the next step, take the next step. And I think that always pays off.
Absolutely. Action is so big in this world, right? As long as you're moving forward, you're right. And moving forward is, even for me, like, had a deal go south, lost some money. But to me, that's a step in the right direction, because now I know for sure what I won't do again on the next deal. Right. You know what I mean? And it came down to just a bad partnership, and, that's my bad. But, now I know I will vet all of my potential partners, right? Boom. Lesson learned. Relatively speaking, wasn't that crazy of a loss, just some earnest money. And so, but to me, like, some people are like, oh, wow, like that might scare them away. It's my first like real deal on my own. But for me, I'm like, sweet. Now I'm just going forward. Perfect. Yeah. And I think as long as you're moving forward and you have that perspective where, you're going to mess up, it's like that feeling where you pack and then you leave for a trip and you're like, I know I forgot something. I know I did. I for sure forgot something, and you're like taking on this deal. You're like, okay, we've triple checked everything, but like, is there something we missed? And
right. It's never going to go perfect to plan, but I think the mindset of, hey, I'm either going to win or I'm going to learn, and learning is winning. So it's like, I have no chance but to win. Ultimately, like, experience is ultimately in the long, this is a long game. This is not a get rich quick scheme. This is, over decades and decades and decades. That's when the compound of all of these experiences, whether it was, what we perceive as wins or losses in the moment, they all shape up to be wins ultimately if you're continuing to move forward. But if you're standing still, that's when opportunities pass you by. And yeah, you may have not won or lost, but you didn't put yourself in the game to be in either position, to either gain that experience or gain that win, because there's some unexpected, by the way, there's a lot of unexpected wins that happen as well. And things that I've learned is, like, when I put myself in the mindset to say, hey, life is always happening for me, not to me. It's like everything. And then ultimately those gifts show up. It's pretty interesting. It's like, I guess at some point it's like, man, you know what? I just foregone my earnest money on a deal that didn't work out because of my poor decisions. But ultimately it comes back and it's like, maybe years later, it's like, oh, that's where the gift was. That's where it was.
Yep. Yeah. It's so true. And as long as you have that perspective, which is such a huge mindset shift. I mean, obviously, daily work in progress for me, for sure. Because it can be easy to get caught up, and it's slow, man. It is so slow, and people talk about it, but until you're in it, listen, if you're a passive investor and you just already high net worth or high income earner and you're just being passive, right? For you, it could go quick, but for those that, like me, that kind of just start and, kind of bootstrap it, and people tell you it's slow, but you don't realize till you get in and you're like, oh my God, this is so hard. And you're like, okay, this is why not everybody's doing this, because it's not hard in that you don't know what to do. It's just hard in that there's a lot of steps that you got to take to really get, and listen, if you want to go, and I'm not trying to, diminish anyone who's taken down, 2 and 4 plexes and just kind of building a slow portfolio. That's great. And it works. But, when you want to actually have like a business and you're syndicating, it's a lot.
I'll say this, and this was something that moved me from sort of the, hey, do it yourself and kind of go the long and windy path. And to your point, everybody to each their own. Everybody has their own path. But this kind of pushed me away from that, because as I was gaining that experience, of course I was applying that myself, and I was taking the next step and doing it better the next time and iterating and improving. But one thing that someone told me was that, hey man, you're being selfish if you're not playing big. And I'm like, wait a minute, what are you talking about being selfish?
Yeah.
It's like, this is capitalism. What do you mean I'm being selfish? It is what it is. But what that did resonate with me after a while. It's like, well, are you just going to keep it all yourself, or are you going to apply the abundance mindset? And I think that when you go bigger, you can go better. And I think that ultimately, not only do you add more value to more people and you allow more people to participate in your experience and, your trials and tribulations, and that's the right thing to do. And those are the right type of investments. That's the right type of energy to live in. But, it's better for the investments. I mean, frankly, your portfolio and your return on investment grows because you can put a better team on the field. You can put better systems in place. You can buy more powerful assets, which are usually generate a stronger return on investment and so forth. And I could go on and on and on. But it was like, well, wait a minute. Was I really being selfish? Yes. But then is this also somewhat enlightened self-interest as well? It's like you're giving, you're providing access to these opportunities at a larger degree, but you're also receiving a larger degree as well. It's like, to me, that's a big clue.
Absolutely. And oh, by the way, on the other side of this are tenants who you're improving their living situation, and so, and when when your partnerships are right and everything's right, and you can bring that experience on the other side of that are these residents who also get to, enjoy that experience, because you're going to come in, make it easier for them, whether that's, better management, amenities, whatever it is, improve, their actual living space, just, the list goes on. and, you know, and they get to enjoy that from you being having that experience and wanting to do that, as opposed to, you know, these do-it-yourselfers who, you know, may not truly be, you know, while they may be able to produce cash flow and things, they, you know, really not operating it at the most efficient level, which really in the end works better for everyone.
Thank you for saying that, because ultimately we can never lose sight of our end user, our residents or tenants, depending on whatever asset class you're focused on. I mean, that's where we have to focus, is how are you adding value? Because if you're not adding value, then you're not going to receive more value. And, you know, to your point, you know, if you're playing small and if you're, you know, pinching pennies, and, you know, because when you do play it small, like the economies of scale, you don't receive those benefits. There are no economies of scale on smaller deals. And I've seen that firsthand. You know, you can read it in a book about cash flow per unit, but frankly, it just doesn't work on smaller deals. It really doesn't. And I don't care where you are. I mean, there's, you know, there's certainly outliers and, you know, exceptions to this rule. But when you go bigger, there's an economy of scale, and that allows you to add more value. Because the other side of it is, look, you're investing for a return on investment. And if you're not receiving that return on investment, you're not going to add any more value to your residents, to your tenants, whatever. So that is an important one that the listeners should not miss.
That's a really great point. Absolutely. Yeah. If your ROI is razor thin, you're gonna be like, all right, well then why would I improve this if it really does nothing for me anyway? And then on the other end of that is a tenant who doesn't get their living space improved.
Yeah, it's a negative spiral. It just, you know, it's like it compounds. So you can compound in either direction. I think the most powerful thing in this world, in finance and in just self-improvement, all this, it's compound interest. And, you know, like when you let, you know, deferred maintenance go, it compounds, it compounds, It compounds. When you compound on improvements, that compounds in the other direction. When you make a mistake and you iterate, that compounds as well. And when you stack that day after day after day, month after month after month, year after year after year, that's when you look back and you're like, oh my God, what happened, in a good way or in a bad way, right? So, you know, pay attention to that.
Absolutely. Absolutely. And you know, there's one common denominator. I call it the common denominator theory to all of that, good and bad. And that's you, right? And that's where the compounding of your self-education comes in. Yeah, it is crazy how intertwined it all is, right? Like all the way down to the sink fixture in one of your units comes all the way back to, you know, you and how much better you want to be. Yeah,
it's an awesome game, man. It's a game of, you know, that's what it is really. At the end, I think treating it like a game, to me, it just makes it fun, man. It makes life worth living. You know, I think back to my corporate experience, and it was more so, it wasn't this like invigorating thing. I mean, like, it was like, I'm going to climb the path that the system has been generated for me. And I shared all those kind of thought processes along that path that ultimately didn't make sense for me and didn't connect with my sort of visceral vision that I had for myself at the time that I wasn't fully conscious of. But, you know, to your point, I mean, this is a game, and the game is about improving yourself. It's about becoming the next version of yourself. It's about uncovering what do you have within you that you may not be aware of. And I believe that all of us have limitless creativity. I believe we all have limitless resourcefulness, curiosity. I mean, that's who we are as human beings. And that's what this business can allow us to find and generate. And it comes through tribulations. It comes through trials. It comes through confusion. It comes through doubt, anxiety, all these things. And it comes through on the other side of fear. And when you go through the other side of it and you say, all right, you know what? I'm going to face another day. You know, I have a lot of problems on my plate. I have a lot of issues. I have a lot of confusion, but you know what? I'm just going to keep trying. I'm going to keep going. And that's when you look back and you're like, you know what? The best gift of this whole business is, it's not IRR. It's not equity multiple. It's not cash on cash. It's about who you become. And it's about the leader that you become for other people around you. It's a ripple effect, man. It's amazing.
It is. It's so incredible. And so when I first started listening to a podcast and like really got into it, I listened to this one, and I don't think they do episodes anymore. It was called The Millennial Real Estate Investor. And it was these two guys from Denver, you know, started in bigger pockets that, you know, obviously that was like kind of 5 years ago, everyone was 1 degree attached to bigger pockets in some form or fashion.
Right.
Anyway, and at the end they would ask, one of their questions was, what's the biggest surprise you've gotten? And I honestly, probably 80 to 90% of their guests said the friends that I made through this. Because when you start to elevate yourself, you then expect everyone around you to be elevating themselves. And if they're not, then you want to seek people who are doing that. And the change in my network just in the last 12 months has been insane. And all of a sudden you're talking to people and you're seeing who's in their network and you're like, holy cow, like I have just elevated myself, and there's a little imposter syndrome that kicks in there. Sometimes you're like, well, what am I doing in a room with these people, but then you realize that they were in your exact position and you're like, okay, cool.
Yeah. And, that's funny you say that about the imposter syndrome. One of the things I've heard about that is if you're experiencing the imposter syndrome, that means that you're a well-adjusted human being. It's like, there's nothing wrong with you. It's not like you don't belong there. It's like, oh, this is a normal part of the process. I'm feeling a bit uncomfortable. And maybe I'm becoming a little bit, like the next version of myself as well, because I believe there's always another level. There's no stagnation. There's no inline, but there is always another part of our own process. And I think that those type of emotions that we experience along the way are kind of a clue that, hey, you're bumping up on that right now. Embrace
Absolutely.
it.
I mean, mentors have Tony Robbins has a mentor and a coach.
Absolutely.
You know what I mean? That means there's someone above Tony Robbins and that person has it, so you, like you said, it's just, there's always the next step and, listen, you can get there a lot of different ways. I just think this industry, like, to come full circle, just allows with the most creativity possible with, I don't want to say the least amount of work, but the least amount of like, you don't have to reinvent the wheel. Everything has been done. There's no real original ideas. Of course, the key is to put your own twist on things and come up with your own sort of ideas, but you don't have to redo anything or make anything up. And so you can sort of follow a path and make it your own. Whereas there's other industries where, you're flying blind, and not as many people want to help. Whereas in this industry, it just feels like everybody wants to help for the most part.
That is a good point. I think, from a micro perspective, there's a lot to be said about innovation and creativity. Like we were talking about earlier, it's like creative deal making and really understanding your niche and maybe creating and designing strategies that are maybe more effective than, perhaps other people who are looking to, execute on a similar investment strategy in similar markets or whatever. But to your point, it's all tried and true. It's like, model success. Success leaves clues, as Tony Robbins says, as an example. You can model success for hundreds and hundreds of years. And it's like these principles are all the same. While obviously the dynamics and all these different things, technology and all this stuff is changing, but ultimately it's timeless principles, it's timeless wisdoms, it's timeless strategies, that all work. And so to your point, it's like, you don't have to be Elon Musk. Like we're not going to Mars. While I admire people like Elon Musk, I love it.
Super
I love what he's doing.
Him.
Yeah, but we don't have to do that. And
right.
and as a result, the risk is in such a different playing field. It's like, yeah, it's not 100x. You're not a venture capital Silicon Valley. You're probably not going to grow 100x in 6 months. But if you do this and you allow the compound effect to take hold and you commit to it, then it's like totally transform your family tree like forever.
If you step into this and say, okay, I'm putting my nose to the grindstone for 10 years, and that, and slowly over that time, I'd say 5 years, I'm going to just absolutely grind my butt off for 5 years, but have a 10-year outlook in terms of, when things really smooth over is what it seems like, you're going to be just fine. Like I think,
I agree.
And one thing that scared me a lot, and I think has brought a ton of people into this, is seeing these like 18-month full cycle deals. And they're still, 2x plussing the multiples. And people are like, oh, sick. Put 100,000 in and get 200,000 in 18 months. And it's like, yeah, you could, or it could take the whole 5 years. So just hopefully you understand that.
Yeah, I mean that's what, like, you and I were talking about this before we started recording, was, obviously the current debt volatility, the current, macroeconomic and geopolitical volatility that we're experiencing, which, who knows, could be, a few years in the making. We could be entering into a recession for several years, and obviously that will generate, its own sort of heartaches financially across the landscape, and, a lot of challenges. But so if we zoom into that, it's like, wow, this is horrible. But if we zoom out and we say, all right, well, you know what, if we are committed to this for the long term, even if we have some short term hiccups or problems or issues that maybe we didn't anticipate, well, then it's like, well, what gift are we receiving, and what type of experience are we gaining, and what next level are we going to as a result? And then you zoom out and it's like, oh, that was a blip on the radar. And but because of that blip on the radar, now we've taken it to this level. And, I think there's a big difference for people who expect, that quick turnaround, and the people who are like, you know what, no matter what, even if I thought on paper that I was at this point, or my asset was here or whatever, doesn't matter. It doesn't matter, because it's all about what you're gaining in your mind, what you're gaining, in your network and your experience, the way that you're handling your emotions, the way that you're, stacking on these experiences. And so, man, I could go on and on, but I think it's very, very powerful.
Absolutely. If you see a 5-year hold and you want to invest in that deal, be prepared for it to go all 5 years. If it goes full cycle sooner, that's a nice surprise. But, as long as you take that long-term mindset, this is absolutely the industry for you. So
I agree.
Sweet. Well, this has been incredible. I wish we could keep going. I'm sure we could go forever, but we'll wind down here to the final 5. First question, best advice you've gotten from a mentor?
Play the long game. Again, it's in every way. I mean, like when you're having a conversation with somebody, it's like, hey, let's explore how we can, learn more about each other for the long haul. It's about long-term relationships. It's about, hey, you know what, this is not transactional. It's like, hey, Jonathan, I want to meet you so that you and I can do business together tomorrow. It's like, hey, let's meet each other and let's see what happens. You never know. In the next 5 years, we could do business together, or we may learn something from each other. We may have fun together. We may laugh. Whatever. There's some gift in all of this, but of course that, and sort of what we were talking about before, it is just about playing the long game in every decision. So with that lens, that's been a phenomenal piece of advice that I've received.
I love that so much. It's so true. I love organic meets, and Zoom has sort of expanded what organic means, but
yeah.
I love when there's not a deal associated or any transaction being the reason that you're meeting that person, so that you can have an organic, conversation and really grow the relationship organically. And then, oh, by the way, if that person's in a market you like, or vice versa, or whatever, you can kind of start grooming it that way, and then really getting an idea of who they are. And then, if you decide you do a deal together. So
yeah, when you really understand each other's philosophies and, skills and all these different things, you can say, well, hey, wait a minute. I remember, when we met, and wow, it'd be really interesting to collaborate. And it doesn't always work out that way, but I can tell you that my most powerful partnerships and, relationships in the space, from a business perspective, have been those that began without any sort of intuit or any thought process of, hey, how are we going to work together? So it's very powerful.
Totally. I love that. What is it about your career that makes you feel like you're fulfilling your why?
Our tagline for our company, CF Capital, is elevating communities together. And I think that the cool thing about this business is it's not a zero-sum game. I talked about the abundance mindset earlier, talking about going bigger, but ultimately the more that we give to our staff, the more that we give to our partners, our investors, the more that we give to our tenants, our residents, and surrounding communities to, we're buying large properties that are a big splash in, the cities and the markets that we invest in. And when we give more, we receive more. And it's not like, hey, we're giving because we must receive this back. But, that's been a big one for me. And like, it just feels good. It feels good to have, solid return on investment. And it's also like, the cool thing is like, we're not sacrificing ROI, we're enhancing it as a result. So it's like, man, this is a pretty cool clue. And it just makes me leap out of bed every day because I know we're doing the right thing by, many, many people. In fact, thousands of people at a time.
I love that so much. Incredible perspective. Favorite non-real estate or investment related book?
Oh man, I've got many. I'm a big fan of books. You can see a couple of bookshelves behind me if you're watching the video here. So I'm a big reader. I will tell you just a very recent book that I just got finished reading was Ray Dalio, The Changing World Order. And it was really
That's his
good.
new one, right?
It's the newest one. And I typically like to read more kind of classics, books that have been around for maybe at least a couple decades because they're, typically tried and true. And some newer books are kind of like, okay, yeah, I get it. You're on the New York Times bestseller list and you're doing great.
How do you even get it? What do you just got to just high five the right person? It seems like every book that comes out to New York Times bestseller.
Well, yeah, exactly. We could go down a rabbit hole on that one. Yeah. My assumption is it has to do a lot more with politics than anything else. And I'm not talking about Republican or Democrat. I'm talking about connections and all that kind of stuff. Yeah. So that's, but that's a really good one. I think it's important for us to understand the changing dynamics that we're going through right now. I think most people have a sense that we're in a massive period of change, but once you really get more context around it, it gives you much more perspective. Because man, we're going to look back and history is going to show, I think 100, 200 years, like this was a big inflection point in time. And so to gain more perspective on that I think is very important, but it's also fascinating. And I've been more and more fascinated with just macroeconomics. And obviously that plays into our business in a big way, but it's very fascinating because it's so dynamic.
Absolutely. Yeah. We're in the finance and economic business for sure. Which I love. I mean, I'm like you, I'm a numbers guy. So I just read about this stuff all day long. It's fun, but it's not for everyone for sure. If you could have any superpower, what would it be?
Ooh, I would think my superpower would probably be to predict the future. That'd have to be,
that would be beneficial in this industry.
Yeah. Yeah.
What if you could, but only a week ahead? Would that be wild? You could only see a week in the future.
It's interesting because we're always trying to assess probabilities. So we're almost doing that to a certain degree. And then we're protecting the downside if for some reason, the other side of the coin exists. If you could only predict a week in the future, I'm not sure how much value that would give us. I mean, right now, a week is like a decade. So maybe it would be valuable.
Honestly, we're going to have to check the headlines just after this, just to see what's changed. You never know.
Yeah. I'm sure you could create some tremendous value by knowing what's going to happen in a week, especially right now.
Absolutely. Last one. What's the best way for people to get a hold of you and learn more?
Yeah. So a couple of ways. So I'm a podcaster like you. I host a podcast called Elevate. It's all about mindset, mind expansion, and personal development for high performing real estate investors. So if your listeners, resonated with what you and I talked about today, I'm sure they'll enjoy that as well. So you can just go to elevatepod.com or Elevate with Tyler Chesser on any podcast platform that you listen to. Also our company, CF Capital, cfcapllc.com. We do have a free ebook for those who want to learn how to add cash flow or increase their cash flow in a multifamily asset. Or if they want to learn more about investing alongside our team, they can just go to cfcapllc.com. We try to provide tons of education, free content, free resources to folks who want to take their investing to the next level. We have no qualms to say, hey, you should be investing with us. Obviously, if it makes sense for you to build a relationship with us in the long term, we invite that. But again, that's cfcapllc.com.
Awesome. I love that. We'll link that in the show notes. Big fan of free education. It's important. Make sure you know what you're doing. Tyler, I can't thank you enough. This has been amazing.
Hey, you know what? 5th time is a charm. And I'm telling you, it was worth the wait, right?
It was worth the wait, man. That was way. Yeah. It gave us a nice, sort of bond there.
I know. It's like, we'll never forget this. We got 5 times and we're going to do it 5 times more, right?
1000%. Hey, thanks again.
Thanks, Jonathan.
Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to CataniCapitalGroup.com to learn more.